Let's talk more now with ING's chief international economist, Rob Carnell. Welcome, Rob. Now, we heard from the Fed that they're talking about lots of different options, but what did you learn when you read through these minutes?
I learned that there's massive division within the Fed, and that's the single thing that stands out most starkly than anything. People wanted just about every policy on the books to be tried or not, or a reversal of what they're doing. I mean, it was as big a division as you've ever seen in these minutes.
So what does that mean in terms of the likelihood that we'll get some sort of consensus and some sort of action at this extended September meeting?
Well, I think the September meeting does promise to deliver something, but I wouldn't be getting my hopes up for a massive bout of new quantitative easing. I think this twist approach that people are talking about has probably the best chance of getting through, but partly because it would be extremely ineffective. It's so sort of inoffensive a policy to keep the balance sheet of the Fed the same size, but just buy more longer dated assets than shorter dated assets. The idea that that would do anything meaningful is kind of far-fetched, and some of the Fed members have already said, I don't think this is going to work. So,
well, that is quite worrying. I mean, some have said whatever we do now may not be that effective. Does that worry you?
Well, it doesn't worry me so much as seem quite reasonable for them to be suggesting that, because issues like long-term unemployment are not going to be fixed by lower long-term interest rates. We're already down at the 10-year Treasury is a shade over 2%. How much more stimulus do you want to get from monetary policy? If you want to refinance your mortgage and you've got a checkered history, it's not going to help you having lower rates.
So that means that the federal government's got to come in and try and help the housing market, in addition to the Fed getting people lower borrowing costs.
I think the housing market still is one of the major obstacles to any improvement in the economic fortunes of the US, and doing something there that's being talked about, trying to get more people to be able to refinance their mortgages, get that cash flow going in the household sector, was an important step forward. But you've got to try everything at this stage, and the Fed's doing their bit. They recognise that the market expects them to do something, so September, that's what they'll deliver, something.
Right, but they can only do so much, and Bernanke did kick it back into Obama's court and say, look, there's only so much we can do. Obama's making a major economic policy speech around the 5th of September after Labor Day. Can we expect anything?
Well, we can expect all sorts of promises, I'm sure. But I mean, all these things, if it requires any kind of stimulus, real sort of genuine stimulus, it's got to go through Congress, and then we've got the usual problems again. So difficult to really have faith at the moment.
Where do you put the chances of a double-dip recession in the US? What percentage would you give the chance?
It's looking pretty close at the moment. I mean, the whole issue with recession is a somewhat arbitrary distinction anyway. I mean, we don't do it in the same way in the US as we do in Europe. Some independent body has to decide whether or not it is. But I think we're pretty close. We're skirting very close to that right now. But I think the third quarter will show some better growth numbers, above 2% at any rate, judging by some of the spending figures we got from household sector recently.
Presumably you're going to be watching very closely the jobs numbers that we get out, also the ISM this week?
You know what? I'll be watching the ADP report today more closely. I think that's the better indicator this week. I think the jobs numbers will be heavily distorted by strike action. They'll look quite weak, something below 100,000. The ADP figures on private payrolls, I think, will be giving you a better idea. If it comes in anything close to what we got last month, then things are ticking along slowly, not very impressively, but they're not getting worse.
Very quickly, I've got to ask you about Europe, because the problems here seem to be worsening as well. Would you agree with that? Also, do you think we can end up seeing the ECB going for pure QE?
Not whilst Trichet is still at the helm, but who knows under Mario Draghi. Are things actually getting worse? I think what's worrying is that the political inaction seems to be sort of gathering even more inertia, if that's possible to say.
Yeah, gathering more inertia. I like that. Robert Carnell from ING Bank, thanks very much.